For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. The next series of videos are going to be about reinforcing your daily process. One of the biggest challenges that I am receiving from traders is that they're missing trades. And what happens is that they're just looking at a bunch of instruments and trying to figure out where they can get a trade. Now I keep repeating the phrase over and over again to traders, well, which setup are you hunting? And the importance of that is when we come back to the playbook is broken down into very simple, basic, repeating 90-10 opportunities. Now, the signal days are about this. We go back to the playbook, and in the first quote, right at the beginning of the playbook, although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, but preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading. Now, we've gone over several videos and broken things down in the playbook with updated current examples, gone over things in ad infinitum, and tried to break things down as simple as possible. But what traders are failing to do in a lot of cases is actually stick to a daily process, a daily routine. We've looked at setting up basic basket of instruments, regardless of the session that you're trading, and having those instruments reflect the types of opportunities that can show up in your session, whether that's Asia, London, or New York. Now, the biggest challenge traders have is actually sticking to their daily process. Now, the traders that are doing exceptionally well and knocking things out of the park are doing just that. They go through their instruments each night to build their watch list. Building their watch list, not trying to take trades. We have market signals from the higher time frame. We went over that in the updated modules. Again, everything comes from the higher time frame, the daily charts. And we're going to go over a specific example today. The next series of videos are going to go into depth into individual setups, keeping things as simple as possible. If you're counting pushes, if you're measuring levels, if you're counting bars and you're looking for gaps, soups, sweeps, hunts, premiums, arrays, discounts, supply levels, demand levels, that's excellent. But what is your rinse and repeat 90-10 trading setup that you can scale up in size, that shows up frequently on any instrument and repeats over and over and over again? Now, today we're going to look at a first red day example from the Aussie dollar. Now, let me emphasize, this is about you mastering the process, because it's the process that will set you free. It's the process that will deliver the goals you're after if you stick to your process. Now, number one, you need to know what you're looking for. Now, we just looked at different signal days. There's first red day, first green day. Same things, just in different directions. The same types of signals can put those instruments on your watch list. We have inside day signal days for reversals or trend trade opportunities. We have 3 days of breakout traders in the markets. Now, that can still give traders a continuation trade, because the most important thing is on the day after the signal, how does price behave on the day? Now, several times I've had traders say to me, oh, that didn't work. It didn't work. I took the trade, but there's no setup. What setup? What is the setup? You have a signal, and that's what we're going to look at today. You have a signal that brings an instrument up on your watch list, and then how does price behave on the day in your session. Now, some traders are trading Asia, some traders are trading London, and some traders are trading New York. Some traders are trading 2 sessions. Now, I've spoke about if an instrument has left the station, there can be low-hanging fruit in my New York session. But if it's already left the station and it's not set up into my session for a coiled market for an explosive move, then I'm looking at whatever other instruments potentially are offering me an opportunity on the day. I'm not going to just keep trying to trade it because it gave me a signal when I might be at an extreme already, and now I'm caught trying to sell a market that has already broken down, and I'm selling at the low of the day, or I'm buying at the high of the day, and the market doesn't go anywhere, or it goes back against me. So when I say, what setup are you hunting? Number one, and what setup have you mastered? Have you mastered executing that trade? Now, the universal entry criteria, page 29 in the playbook, makes things simple. As I said, and I make fun of this, dummy proof. It's dummy proof if you know exactly what you're doing. And then it's entry, stop loss, take profits. Those are the only 3 things you can do. The only 2 things traders can control is how much you will make on a winning trade and how much you will lose on a losing trade. The more information you add in and pushes and swings and gaps and levels and blah, 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 the more you will have analysis paralysis. Everything is timed and measured. Entry, stop loss, take profits. Now, each of these videos that we go through, all these PDFs will be attached to the videos. I'm going to add them into whatever section the trade setup is in the course. So this is a first red day setup today for London session traders. We're going to go over it and explain things as we've gone back through in the higher time frame videos, keeping things simple and just using common sense. If we're looking to sell, we're looking for a market that's pumped up. First red day, pump day. And then how does price behave on the day? First red day is a day that closes below the open. Now, when March started, we had a first green day explosive move right at the beginning of a new month. New month, new timing cycle. I'll keep repeating things over and over again. Repetition is what builds your muscle memory. Repetition. Now, the market broke down from a peak formation. We went up 1, 2, 3 higher closes after closing in breakout and then pulling back, and that gave us a high of the month level and a first red day signal. Now, most importantly, let's just project this level across from the high of month level made in March. And what we have is a first red day area from back in February where the market sold off. That was the first red day signal where the market broke down and collapsed back inside of the previous month's range. Now, this is where I just want to emphasize to traders, looking left, hindsight pays, above this area, the market broke out and sold off again. Above this area is higher time frame selling. Now, here's the thing to think about. If sellers stepped into the market there before, it's possible they may step in again. If buyers come in down underneath these monthly levels, it's possible that buyers may come in again. When we get a signal day and we're heading into our session, that instrument shows up on our watch list. But how does price behave on the day? This is where you need to master your skill set for live time, but it's simple if you make it simple. Now, we're looking at signal days when markets close. This is a daily chart, New York closing charts, 4:59 p.m. New York time. The only time you need to concern yourself with is New York time. Now, above this level, we have higher time frame or other time frame selling. Now, the market could keep going higher. It could keep going higher all the way back up. We don't know. But it shows up on our watch list because when Tuesday closes, we had Monday closing in breakout. Now, one of the questions that I received was, yeah, but it didn't take out any monthly levels. Yes, it did. It took out the high of the current month. It closed in breakout, closed as a first red day into an area where we had first red day selling before. So it's possible that we may have selling occur again. But it shows up on our watch list because it's a first red day signal, a day that pushes higher, doesn't quite take out the high of the previous day. It's the same level, but it's the high of the week, highest closing price of the month on Tuesday and the week, and then closing as a first red day. Now, I'm going to keep emphasizing some things here about simplicity. Unless you master the understanding of first red day, first green day, and keeping it simple, we're hunting the setups, the 90-10 setups. We're not trying to guess. We're hunting the setups where it's easy to make money. So if I'm looking for a first red day signal, we've highlighted different examples. Go back into the course and watch the higher time frame examples again. But we want to trade first red day signals where we have an easy opportunity to make money. We're not trying to catch the high. For example, we're looking at a daily chart of gold, and here's what traders try to do. They're trying to catch the high. They're trying to catch the high in a market all the time, in a market that's in breakout. There's no first red day signal here. That's a down closing day in a market that's in breakout, still making higher highs and higher lows. That is not what I'm looking for. We're looking for where's the easy money. Now we get a market that closes in breakout and closes as a first red day signal. Now, how does price behave on the day in the session that I'm trading? So I'm trying to hammer home common sense, because this is where traders counter trend markets in strong breakouts and they go, oh, it didn't work. But that's not a setup. That is not a setup. So when traders say, well, it didn't work this time and it worked last time, and you cherry pick, the whole point is to cherry pick. That's when, once the penny drops, start cherry picking the easy money. Don't try to get in front of a freight train. We're not trying to catch falling knives. We're not trying to, short a rocket ship. Let the market set up and give you a signal day. Let the market set up and give you a signal day. So we head into our Wednesday session, and I'll repeat this again. Wednesday, day 3 is the midpoint range of the week. Day 1, day 2, giving us a first red day signal. We have a market that has now coiled sideways into our London session. Now, for traders who have taken the masterclass, you've heard me repeat this. Markets that coil sideways are preparing for a potential explosive move. Now, if we just go back and look at the basic pump and dump and pump coils, we have our dump, coil, and pump for an explosive long trade setup. We have our pump, coil, and dump for our shorting setup. And keeping it simple is entry, stop loss, and a take profit level. So heading into our Europe London session, we have a market that has coiled sideways. We have our thesis in place. We have our first red day signal. We have our pump heading into our closing range of the day. We have our coil sideways. We have our lower lows underneath of closing price. Paul Tudor Jones, think of your entry point as last night's close. And zooming in, it's a 5-minute chart. We have our entry. We have our stop loss in place, which is less than 10 pips. And we have a 100% expansion of the range, which brings us back into where that original breakout started on our higher time frame. And we have take profit level, locking in the money and walking away, keeping it as simple as possible. Now let's go back to the daily process again. We have a market that's closed in breakout on Monday, giving us a first red day signal on Tuesday, the first red day collapse in our London session on Wednesday, day 3, the midpoint range of the week. Day 1, day 2, day 3. 2 types of trade setups, if indeed they set up on a Wednesday: trend continuation trades and trend reversal setups. Now, the most important thing I want to emphasize to traders is the daily process. Understanding what setup you're hunting, not just going and looking for trades. Which instruments are set up? Which instruments are in your basket? Which ones are giving you a signal day for the next day's watch list? How does price behave on the day? And then rinse and repeat, keeping things as simple as possible. Universal entry criteria is there to remove the analysis paralysis And then it's entry, stop loss, and a take profit level. Keeping things as simple as possible, traders. Now, again, these charts will be attached to this video and put into the course section. We'll be continuing this with some other examples from this week, but I emphasize again, your daily process, know exactly what you're looking for, keeping things really, really simple, rinse and repeat, and then sitting on your hands in between and not engaging in any self-sabotaging, degenerate gambling, impulsive, irrational, impatient, and emotional type of trading or behavior that can lead to blowing up your trading account. So hopefully this video had value, traders. Keep it simple, and may the markets go with you. Have a great day.